Greg, small bay warehouse, it's a word we don't hear a lot. It's not a niche that's very common. Can you let our audience know what a small bay warehouse is?
Absolutely. Yeah. So small bay warehouse is generally somewhere in the 1,000 to maybe 5,000 square foot range, kind of condo style warehouses, also known as flex space, that small businesses and even just individual people could come and rent for a variety of different uses. It's become a very popular asset class right now in the real estate investment community. Storage was a really big asset class for a while and
Yes,
actually
it was.
around in a lot of those. And that market is really oversaturated and the prices are very high for storage facilities. It's hard to get them to cash flow, especially with interest rates where they're at right now, even though they are kind of coming down, hopefully here, even more before the end of the year. So my partners and I jumped into flex space, industrial, small bay, because we just saw a huge opportunity, a huge need for it. Did a lot of market research in different high growth areas, Texas, South Carolina, North Carolina, Georgia. Those are all areas that we're looking at and expanding, buying land, and actually building some of these small bay industrial warehouses.
Now, how about in comparison to large industrial warehouses? Are they not cash flowing? Are they oversaturated and overpriced as well?
The risk is a lot higher, especially if you're doing development on those, because you need to get a big tenant in. And I was just having a conversation with my business partner and an investor earlier this morning, and we were actually talking about like big facilities, 500,000 square feet that maybe an Amazon or a Walmart distribution center that might use. And in those cases, they can be profitable, but you also got to have a lot of capital behind you, people that know what they're doing, and ideally you have a buyer in place already. You have Amazon, who's the buyer, but Amazon is already so big, they own a lot of that real estate as well. Gone are kind of the days a little bit of the Best Buys, the Bed Bath and Beyonds, and things like that. So you're putting yourself a little bit at risk if you're looking at some of these bigger commercial buildings. Although you can lock people into some long leases if you can actually find the right tenants in that. But for what we're working on, a lot less risk in some of the small bay flex space. They're really easy to modify to some of the buildings we're building right now, where they are portioned out in 2,000 square feet per unit. But the building itself is 10,000. So we have 5 condo units in our 10,000 square foot building, and somebody can come in and buy 3 of them, and we won't put up the partition walls, or maybe they want two. So it is very flexible just to accommodate some of these growing small businesses, or even just like there's even like high-end garages is really popular right now. Like people that have some extra money, maybe they want to store their boat and kind of create some sort of like man cave out of it. People also use some of them for that as well, which is becoming kind of popular.
They store their boats in these small
Yeah, yeah,
workspaces.
they use it for a storage facility or a little man cave or something like that, where they can go and just have a separate place for storing some of their own equipment.
So is that your typical tenant profile
It's
or is
not.
it
It's
business?
not. We're usually focused on businesses. So, small e-commerce businesses, small distribution centers, HVAC companies, auto wrap, auto detailing companies, CrossFit gyms, all sorts of things like that. Landscaping companies to store some of their equipment. There's a little office in there. There's a bathroom, and then big roll up 20-foot roll up doors. So there's a whole variety of different uses for it.
Got it. And the leases for these tenants, are they month to month like a storage space, or do you do these long?
No, and that's one thing that was very attractive on flex spaces. With storage, you are stuck with typically month-to-month leases, or people coming in and out. Depending on their living situation, you're actually dealing with people that are residents, and they may be moving out of storage because they don't have money to pay rent or something like that. So you're looking at evictions and so forth. But with the flex space, it's triple net. triple net leases and 3-year lease terms. So, we lock people in for the 3 years, and, it's pretty like set and go. I would say it's probably one of the more passive real estate classes you can be in for actually managing it, not just investing, but if you're managing these, there's not much to it. I was listening to a podcast as well, and the stats were, the volume of calls that a flex space would get versus a storage unit is like 90% less, right? Because you're constantly dealing with people with, getting in and out or moving or, coming in on the storage side.
So from an operational perspective, it's a lot easier.
Yeah, and just trying to streamline everything there. We do have, like an HOA called POA, and but there's not much there. Landscaping and general repairs and things like that.
Can you do value add with these flex spaces, like storage? You can do U-Haul and bump up your NOI.
There are some flex spaces out there for sale if you can find them. There's not a whole lot you could do. Maybe some cosmetic things, like we're doing like luxury flex space. So we've got some nice rock out front and some stucco. You can go cheap on that end. Or if you find one that's a little bit run down, you could maybe, cosmetically make it look a little bit better. You could put air conditioning in, you could put in bathrooms if they don't have it, and plumbing or things like that. But generally, there's not a lot of quote unquote value add if you're going to go buy one of these, that's maybe under marketed or something like that. So building them was more attractive to us because we could build them to our standards, which is, high. We want to have kind of this luxury style. And we just wanted to make it also flexible for people to buy 2,000, buy 6,000, whatever, and rather than be kind of set with what was already built there in the first place.
Got it. Now, you mentioned the market demand was going up for them. What about supply? Are there a lot of these flex spaces out there, or are we limited to that?
I like to say that, my part, it's been around for a long time, but it's becoming much more popular as of lately. It is definitely a growing asset class that we want to get into, and we are into very quickly. We want to do 4 or 5 of these deals a year. Some of the Texas area and even like Austin, that has had quite a bit of flex space built out there. Another area we've been looking at is in Havasu. Same thing.
Arizona, Lake Havasu.
Arizona, yeah, Lake Havasu in Arizona, right? Where people might use them, some for their personal storage, but also there's not much in the way of like business flex space out there. So, yeah.
And how do you pick your location for these when you're building?
A lot of market research. So again, we're looking for the high growth areas. So we've kind of narrowed it down to those 4 locations, like I said: North Carolina, South Carolina, Georgia, and Houston.
Typical.
And yeah, a lot of it comes down to zoning, permitting. So for example, the place we have in Houston is outside of the main city, so we're not stuck with permitting issues with the actual city. It's more in the county, which speeds things up. We're also checking things like making sure we're outside of the flood zone. There's some certain specifics based on where you buy the land, obviously, and getting surveys and your phase 1 environmental studies and all that stuff done to really understand what you need to do. Like we have to have a retention pond in our current place, so we're building in the retention pond into the whole spec, and that's just kind of part of the game too. Other places we've looked at actually have like a retention pond built for a larger area, so we actually can capitalize a little bit more on the square footage of the land. So those are all things we're looking at, in the underwriting, and trying to figure out how much square footage can we get out of this specific land, right?
Okay. Are there any challenges as an investor that we should be on the lookout for?
Of course.
Like,
yeah.
how do we, what are they? Of course, yes, but what are they? Let me rephrase that question.
Yeah.
Like, how do we know something's a deal and not a deal?
Yeah. I mean, with any investment, there's some sort of risk, right? And
Of
the
course.
returns
Let
are
me
very
rephrase.
good. in flex space as compared to other things. And the returns are better in development, but with development, you do also have risks, right? We do have potential construction timeline risks. Oh, sorry. We have some construction timeline risks. We have environmental risks, right? We are in Houston, so we could get a big storm that could delay some things out. We do have market risk of since we are building from the ground up, nothing is leased or sold right at the moment. We're going to put them up for sale as soon as we break ground. So ideally, we pre-sale 30 to 40% of the units. So the risk there is maybe there's some additional holding costs, right? But when we underwrite deals, we definitely take into account the extended timeline, any sort of thing that might happen throughout that. If we say it's going to be 18 months, we're going to spread it out 24, 30 months and just make sure we give ourselves enough leeway and the numbers and the underwriting still works with the extended time frame.
And do you sell these to individual investors or a REIT or a fund, a real estate fund?
I mean, we're kind of open to whatever. We're working directly with our broker, and we do have a list of people that in the area that are interested in this type of building, but generally it would be business owners and people that want to purchase them. I would imagine, like, just as an investor, to buy one of these units when the interest rates come down a little bit, that just based off of our square footage rental prices, that they could potentially cash flow on these, and it could be a good long-term investment, just in general. So again, condo style, where somebody can buy a 200,000 or 2,000 square foot unit for $300,000 or $400,000, and that might be actually a stable investment for them because they've got a triple net lease over 3 years with a good tenant that is a business that's in there. You're not having to worry about squatting, squatting. I mean, California, it's a big thing, right?
Correct.
So you're not
Yeah.
having to deal with a lot of the stuff that comes with multifamily and residential that I've messed around with in the past, but I'm trying to move away from some of the complications there.
Well, in multifamily, you have to have an operator managing it, a property manager.
Yes.
Is that
Yeah.
the same for these spaces?
Yeah.
If you were to buy one or two,
Yeah.
would you recommend that?
Yeah, so we as the general partners will be operating our facilities initially, and a lot of these deals too, we develop and we sell. So we're not actually going to be operating the day to day. We will potentially, just depending on market conditions and how things go. Also, you get the depreciation if we have the intent to lease them over the intent to sell. So, some of these we may lease up and then actually sell afterwards. And that way the value of them actually goes up because now we have investors that want to come in and maybe buy, 5 of these units that are fully leased up and ready to go.
Fantastic. And are there any emerging trends that you see in the development of these?
I think people are starting to find out about it. I love talking about it because I live in a world of abundance. I think there's plenty of opportunity for everybody.
That's
But
right.
it's becoming popular. There's a lot of there's podcasts and there's other people out there. There's the guy named Tyler Cobble who's really good. People should follow him. My partner was just out at one of his events in Houston yesterday. He talks a lot about flex space, and I think it's becoming a very popular asset class. A lot because of a lot of reasons I talk to you about is this low maintenance. The thing that gets tricky is I think people are scared to jump into development because of the added risk, or maybe they don't have the right partners or know much about construction themselves, right? So what I've done is just make sure that I partner with the right people. My buddy Chad, who's got 15 years of steel development experience, and working with our broker and the GC who builds 500,000 square feet of this every year. So partnering with the right people, making sure that we get the right prices and we're minimizing that risk as much as possible. But
Absolutely, because you're the pro forma guy. You do the financials.
I'm the finance guy. I'm the
Yeah.
finance and the legal guy. That's my background. And so, we set up, we're working on moving eventually to a fund, and we've done some syndications, but we're really excited about where this whole thing can go, and we're always looking for people to partner with and help us along the way.
Fantastic. And can you be a little bit more specific about what you're working on right now?
Yeah, so like I was saying, we're really focused in on the Houston market at the
Great.
moment. So 2.5, we have one facility, it's 2.5 acres. We just put an LOI and an offer on another one, also just about 2.5 acres. The facility itself is 15 condoed units over 3 buildings. So that's 10,000 square feet per building, 30,000 square feet total, 15 units. And again, kind of this luxury style, glass windows, glass roll-up doors, stucco, rock, some nice landscaping. Really going all out with the design. I take a lot of pride in the work that I do. I want something to look really nice, somewhere that I would want to be and have my business as well. Other than that, it's pretty straightforward. Yeah, a bathroom, small bathroom, small office inside, and yeah, pretty straightforward. Easy build. The timeline on the build is about 12 months, and
That's fast.
it is, yeah. Yeah, there's not much to the building, so that's, again, there's not a lot of like furnishings on the inside and like special touches and things like that. But again, we want to make it look good.
Fantastic. Now we are getting close to the end of the interview. Is there something that you want to tell the audience that I haven't asked that you might want to share?
Go check out Flex Space. I think it's I really enjoy real estate. My background is finance, and as a CPA, I spent a lot of time helping people grow their businesses, working with a lot of people that have made a lot of wealth in real estate, and understanding the intricacies of how that works from a finance and an operations standpoint, and then building that into my own investment portfolio. I've got a lot of investments in different real estate deals, everything from hotels to commercial to residential,
That's
and
great.
really nailed down this niche specifically as a way to not just build wealth for myself, but also for my friends, and really have a way to kind of get out of the grind a little bit. And I think a lot of people are interested in real estate. They don't know how. They like think they want to, I want 10 rental homes or whatever it is, or Airbnbs. I think Airbnb is so saturated right now. I was just talking to another friend
Absolutely.
about that. So, do a lot of research and just try to figure out exactly like, something that really fits your profile, and how much do you want to be invested in it from a time standpoint, right? Do you actually want to be operating, whatever real estate it is? It's a lot of work. Whatever area of real estate you're in, if you're actually buying it, people think it's a passive asset. It is
Correct. It's
generally
not.
generally not. So if you find that one, you let me know. But if you invest in a deal as a limited partner, and you're actually not the one operating it, for example, a couple of these hotels that I've been an investor on, I'm just incredibly grateful that I am not the one operating it, because it is a lot of work, full-time job plus. So finding that right area that, kind of fits what your need is, your lifestyle, and what you're actually looking for.
Fantastic. How can our listeners get in touch with you if they want to? Do you have a website or?
So it's captaincapital.com. So my partner Kurt is the founder there. I'm the CFO at Captain Capital. You can find me on Instagram. It's the Greg M. Wilson. And also Precision Financial, which is my accounting firm. We do bookkeeping, outsourced CFO work. Been doing that for a long time. That's precisionfinancialllc.com. So those are kind of the three things going on.
Fantastic. All right. Well, thank you so much for your time. This is really informative, and we look forward to having you back. Thank you.